Okay, good morning, everyone. Welcome to the webinar this morning with Alain and myself. So we're looking at continuous assurance with data analysis. Before we get into the slides, just a few housekeeping and points of order, I guess, just to let you know about. First thing is that we will be recording the session today, and so we will be making that and the slides available at a later point, and we'll provide you with links to download those, and hopefully you'll find those useful to facilitate discussions with colleagues and share as necessary. You'll also notice, hopefully, on the top of your screen, you have a Q&A button. So please do use that as the medium to raise any questions as we go through the presentation. Those will be monitored, and we'll take a view as to, if it's sort of pertinent to pausing the presentation to respond to that question. We'll do so. If not, we'll pick it up at the end. There will be a formal Q&A session at the end of the session as well. So we're looking to leave time for any questions overall at that point. During the session, we've disabled mics and cameras just really for helping the session go. But when we get to the Q&A section, we will be opening that back up again, so you will be able to speak directly in terms of questions to us at the end. So I hope that's all okay. The idea being that we just keep the whole session moving and hopefully keep it interesting for you. Okay, so in terms of what are we going to be looking at today, we're going to, firstly, Alain and myself will introduce ourselves and our respective businesses. Some of you may know us or one or other of us, and some of you may be new to both of us, so that would be good to go through. We'll then just very briefly touch on what data analysis is, and then sort of the limitations of a traditional assurance approach, before we then move into talking about what continuous assurance is, the barriers, how to get started. Some talk around pricing, because I think this is one of the great misconceptions about continuous assurance, is that it's very expensive, and it doesn't necessarily have to be. I guess pricing is all in the eye of the beholder, but we'll give you some indications of what sort of quantum are you looking at in terms of a continuous auditing solution that hopefully, or assurance solution that hopefully you would find useful. And Alain at the end will sort of go through some live case studies. We'll be putting a few other examples as we go through, just to hopefully get the imagination going, and give you some ideas where you can use this within your own organizations. And as I say, questions and answers at the end. So hopefully that's okay. So first of all, I'm going to hand over to Alain for a brief moment, just to let him introduce himself and Sepia Solutions.
Thank you, Neil. Right, so my name is Alain Rousseau. I started Sepia Solutions in 2010, quite a bit of time ago, because I really liked what I was doing before, and I was already working within mainly the internal audit sector, but certainly with data analysis tools and GRC tools. And that is still what I love doing, and therefore what I still do. Most of all, I love doing the trainings and the implementation projects. I do have a weakness. I simply can't resist a technical challenge. So Sepia Solutions is basically that we focus on the GRC tools, the data analysis tools, and because of the, let's say, technical skills, we really can provide an end-to-end implementation, from the installation to the training to the technical support and all the consultancy that goes with it. So I think that's it for me at the moment. Over to you, Neil.
Thank you, Alain. So in terms of myself, then, so I'm an ex-head of audit. That's my background. I've been in audit for many years, and I'm also a member of the IIA Data Analytics Forum steering group here in the UK. So essentially that is a monthly meeting that runs for IIA UK members to talk about all things data analytics. So if any of you are in the UK are not members of that, then please do reach out to myself, and we can certainly put you in contact with that group. It is free for members to attend, so certainly that could be a good next step if you haven't come across that already. I've worked for a number of kind of interesting firms, shall we say, over the years, and I guess where my journey started with data analytics is where I implemented data analytics and continuous assurance into my own audit team, or when I was head of audit. So that's really where the journey starts. Just about T4B, really, that we are essentially a one-stop shop for all things data analytics within the assurance space. So we provide training through the IIA and in-house to teams in how to get started. We, as you will talk about later, we are also a reseller for our Butus Analyzer, which is a data analytics engine, and we also can provide co-sourcing. So if perhaps you've got a tool already, or maybe you just have a particularly complicated data set that you need to work with, we can absolutely help on that specific task that you have at a very reasonable cost, shall we say. So that's probably all I'm going to say on that for the moment. So hopefully that gives you an idea of who we are. Hopefully that gives you some comfort that we have some idea what we're talking about today, and we hope to demonstrate that over the next hour or so. So first of all, let's get started. What is data analysis? Well, this is the definition that we use. Process of inspecting, cleaning, transforming, and modeling data. So that in essence is saying that we are taking some data, we are doing some activities to that data. The key point to be able to discover useful information and suggested conclusions. So within the assurance space, this becomes very pertinent, which is, we're looking to actually use the data to understand what is actually happening in the control environment that we're operating, and therefore be able to make logic-based conclusions on what that data is telling us. And ultimately to support decision making. And this is one of the key bits, I think, where we talk about assurance and data analytics. There is so much myth and legend in any organization. People think they know what's happening. They think that something is happening very frequently, or perhaps they think something is happening very infrequently. With data, we can answer the question with precision and say, this is happening to this extent and this frequency, and it's costing you this much. And so we are able to cut through some of the sort of the politics, some of the suppositions that the organization has in place. And this is one of the key elements that when we talk about data analysis as to why it's useful for us as assurance teams. So the benefit is more efficient testing. Gone are the days of picking a paper sample or sample of paper files, turning the pages to understand whether something happened at the right point. We can look at a large number of records, potentially 100%. If the data is in a format, it is in a structure that we can get access to it, we can look at 100% of transactions. So very different animal from a traditional assurance review. Because we can see 100%, we're in a position to identify both outliers, unusual transactions or unusual events, and unexpected results, and also to get a better sense of what's happening in the business area itself. This is one of the things I talk a lot about, is that managers, even if they are trying to do the right thing, are often very poor in terms of the information they have available to them through the three standard reports that they've been given to use. And so using data analytics, we're often able to find out things that they were frankly unaware of beforehand, and to give them that insight and to be able to help them with the problem that they're struggling with. In terms of some examples of what we can do, some very practical applications of data analytics when we're looking at it. So we can verify in-system calculations. If you've got complex calculations going on within the organization, perhaps you work in financial services and you've got some highly complex charges that apply, FX rates, or even if it's just literally trying to work through the rostering system within the organization you work in. So in the NHS in the UK here, we have a rostering system for people working in the hospitals, actually understanding how that works and are people working when they're supposed to be off sick, is quite complicated. So we can do those systems and check that the right rules have been applied, that people have the right breaks between working patterns and so forth. We can look at date and time comparisons, which I guess is kind of linked into that to a degree. Did the approval happen before we issued the payment? Are the KPIs being correctly reported? Looking at those dates and times and actually recalculating them to understand whether they are accurate. Financial authorization limits, a very obvious target. Actually looking at all the payments that have gone out, matching them to the authorities of those approvers. Are they all being correctly approved? And then, but it's not just monetary or time and value. We can also look for words and text within analysis as well. Maybe we are looking at the expense claims and we want to look for certain types of expenditure that is perhaps prohibited. Maybe we're doing some sort of investigation and we're looking for certain aliases or abbreviations that we're not expecting to find. Or maybe we're just looking for all the possible ways that somebody on the telephone could have expressed an element of dissatisfaction. In the UK in financial services, any complaint has to be logged. Hopefully less so than it used to be. It used to be very rigid. Well, they didn't mention the word complaint, so I'm not going to capture it as a complaint. Most organizations are now far more realistic on that now, but we can use analysis to look for any kind of element of dissatisfaction or expression of dissatisfaction within some text, and then classify that as a complaint and just see whether that has been correctly captured by the operator at the time. So these are all things we can do with data analytics. Another thing we can do is look for specific transactional product types. Maybe there's a particular product that you have a concern with, or you're looking for a particular type of transaction for your sampling, for your audit, for your review, to check that all products are being covered, all transaction types have been covered. Again, we can use analytics for that rather than just picking transactions at random and hoping to find that elusive category that's missing. And finally, we can understand the data patterns. Do we have people working from home and approving transactions very late at night? Maybe that's okay, maybe it's not. Could be an indication of people being pressurized into working longer hours than they're contracted to, or maybe they just prefer to work at strange times. Take some time off during the day and work later in the evenings. But again, right or wrong doesn't really matter. The point is we can identify those and understand them and then ask the right questions in relation to them. And I think when we talk about data analytics, it's just worth, I'm not going to go through this diagram in detail, but very quickly, the left-hand side is basically level 0, no data analytics. Level 6 is your AI, your machine learning, the sorts of things that your big investment banks with teams of data scientists will be doing. And everyone else sits in the middle somewhere. And so really it's just the concept to say that data analytics is not necessarily a binary question, a yes or a no. There are different flavors, different levels of sophistication, and different activities that can take place. And I think what I would say to you all is don't automatically assume you have to get to level 6, or your organization should get to level 6, but you should have an expression, a defined final state that you want to get to of complexity in mind so that you can plan towards that. So you may say it's level 4, level 5. You may put different words around describing what a level 4 or level 5 looks like, but as long as you know where you're trying to get to ultimately over the next 3 years or 18 months, whatever the time scale is, that's the important piece, and then you can start building towards that. So if we then look at, we've talked about what data analytics is, why it's kind of a good idea. Let's look at some of the barriers to it. The first thing we have is, that we hear people say is either they don't have any software to do it or it's too expensive. Those are very common. We perhaps have some arguments that say people don't have anyone in the team who's skilled or is able to do it. Perhaps they don't know where to get the data from. Or finally, sort of where do we start? How do you do it? So we're going to try and unpack some of these over the course of the next few minutes, and we'll be talking to some of these specifically. So these are the common ones. You may have some others, but these are typically what people say to us when we start talking about data analytics. So how does it work? Firstly, I think it's worth just reflecting on this. So if we look at the data analytics landscape, what we have and what you will have in your organizations are a number of systems, and the names could be anything, frankly, but you'll probably got a finance system. You'll have some sort of system that captures the transactions that your organization undertakes. Maybe there's a client system that may be linked or combined with the transaction system, but it may be separate. Inventory system, or it could be cloud. And when we say cloud, in broad simplistic terms, cloud just means it's the same system but held in a different environment. It's held in a virtual cloud. You don't need to worry too much about that for the moment, but just be aware you may have heard the terminology. So each of these systems, they operate, through a PC, through a laptop. You log in, you can enter them, you can do data, you can do transactions. But what you're looking at as you're doing that is essentially the front end to a system. Behind all of these systems will be some sort of data repository where the actual data is held. And unsurprisingly, the front end system that you're interfacing with will communicate with the back end repository. And so this is just an important concept to understand, is that you're dealing with the front end, the screens, the tables that you see, but at the back end, all the data is held. And the problem we have with people getting started with data analytics is that these individual systems rarely talk to each other. So we have the databases at the back end, but we can't use the data in the native form to join the data. So we can't, for instance, take the finance system, take the client system and say, have we got all our suppliers listed correctly? Have we got all the right details in there? Are we using all the suppliers that all the clients that we have, are we paying them all correctly? We can't necessarily join those systems together, and this is where sometimes you get this barrier of, well, we can't access the data or we can't look at it. So we'll talk more about that in a moment, but just to understand this problem is useful. When we then talk about assurance review, data again is just a slightly different screen in terms of the different types of data systems that we have. There are many more. The one I would just latch onto is the second from bottom one, the other IT systems, and this is where your IT departments will have a number of interesting data sets that you can use. It could be that they could be IT logs, firewalls, times that people log in. They may manage the door access systems within the organization. These are a great source of alternative sources that we can use to understand if things are happening in the correct order. So don't discount these at all. As we move into an assurance review, then what we're saying is that using data in assurance review helps us to highlight trends and anomalies that are in the data in the processing. So we start with a data source. Now that could be, for those starting out, could be what we call a data extract, a standalone data file that you're given, an Excel spreadsheet, a .csv file, maybe even a PDF. As you get more advanced, then you may look at actually then connecting to the data sources. And certainly when we talk about continuous assurance, that's where we're heading towards, that sort of automation side and immediacy side, where actually the data is connected. So we start off with a data source, and those are from one of the repositories, or one or more of the repositories that we've just spoken about. We then basically connect those to a data analytics tool. So yeah, we would talk about Arbutus as being in that camp. So this is where you're actually doing the analysis itself. And then you have the option to communicate those test results back to either the manager or the auditor, the reviewer, whoever's interested. And that could be in terms of an individual file, again, such as an Excel spreadsheet. It could be through an interface to Power BI or Tableau, a visualizer, as we would call them. It could be automatically through email, or it could be through some sort of web portal where they can retrieve the results of the analytics. So this is the typical cycle. But the beauty is, once we've done that once, and this is again as we move towards continuous assurance, once we've done it once, the system, Arbutus, will capture how that you did that the first time. And so what that then means is that the testing becomes repeatable. So you can use standard pre-built tests that come bundled with the tools. So here you'll see with Arbutus, we have 76 standard tests that are mainly built around the sorts of things that your external auditors would be interested in, or your finance team would be interested in. Those are already bundled and are available. You could build your own menus of tests, something bespoke to you, maybe a set of tests that you do once a month or quarterly. Here you can pick and mix which tests you'd like to run, or indeed you can schedule them. And this is, again, as we move to continuous assurance, you're able to basically schedule how frequently you would like a test or a piece of analytics to run, whether it's one time, daily, weekly, monthly, whatever it happens to be. So, and that all stems from the fact that you've done the analytics once, the tool has captured what you've done and brings then repeatability into the equation that perhaps we didn't have before. So hopefully I've set you a wonderful view of why data analytics is such a great thing, but let's just reflect on what's wrong with the traditional approach, our traditional assurance the approach that we've used. Well, the starting point really is the sample basis. Most teams nowadays, they've moved away from statistical sampling and they've moved to a sampling basis, which is more akin to what you'd see the external auditors doing. So I would rarely now see a sample size of more than 35. If you then start thinking about that in terms of what are we dealing with, the levels of data that we're dealing with, a sample of 35 for a sample of 1,000 records, okay, perhaps that sounds okay, but what if it's 10,000? What if it's 100,000? What if it's 200,000 records that you're looking at? That number of 35 as a sample starts to sound somewhat tenuous in terms of your chances of picking up a transaction that is incorrect, or being able to understand how many transactions you have where perhaps something has gone wrong. They are periodic because they're largely manual. It means that we will get round to an area every year, 2 years, 3 years maybe. So we'll come in periodically, we'll do our review, and in between, we don't really know what's happening. Anything could be happening. It could be getting worse. It could be getting better. Now, we hope, obviously, that the recommendations we've made are being maintained, and we'll touch on that in a moment, but we have to just hope that that's happening. And because we're looking at a small sample, we're looking back over an audit period that may be 2 or 3 years. Our opinion is pretty much always historical. We're able to tell people, yes, we can see you had some errors, in 2022. Dare I say it, it's not particularly helpful. It doesn't prevent any losses of errors occurring. We're just telling management perhaps what they already knew already. And this is really the key point for me, the key weakness, I guess, of the traditional approach, which is, we're only going in there every year, every 2 years, 3 years. We are wholly dependent on management implementing what they agreed and maintaining them, and that's the key point. And I don't mean that in a disparaging way about management, that they are deliberately stopping doing things we've suggested they do or they've agreed to do. But they're busy people, things, fires happen, an emergency will happen, staffing issues, whatever you'd like to think, is going to detract them. But the reality is that many managers, or the majority of managers, I would suggest, will be detracted in some shape or form from what they've previously agreed to do. And so we see that the quality of the controls does tend to slip. So, if we look at this another way is, if we're looking at this from a typical model, we've got a 12-month period. We'll come out and we'll do a review on process A. We'll look at 5 controls. We'll then come and do process B and so forth across the year. We will issue some sort of report at the end of this that will give a level of assurance at that point in time. But as you can see here, then, review A, the 5 controls, won't be picked up again for a period of time. We may do a follow-up at some point during the 12 months, but we're only able to give assurance at the point we've dedicated the 2 to 3 weeks or 4 weeks that we've spent doing the review, doing the follow-up, to be able to give an opinion. So it's very short term in terms of the moment that we are delivering for them, the level of assurance. Another way of looking at this is, quality on the left, on the y-axis, time on the right. Quality will ebb and flow. That's just the nature of things. We'll come in and we'll do a review. Things will improve. I say, as time goes on, the focus on those controls perhaps will slip. Other things will become more important. Quality will fall, we'll do another review, and the cycle will start again. And this is, I say this as an auditor, then it doesn't necessarily take any pleasure from this, but this is just what we see. And I'm sure many of you can kind of relate to this. How many times have you gone back for a follow-up or for a subsequent audit and found actually exactly the same issues as you found 6 months prior, 2 years ago? You find the same things recurring, and you're left wondering, well, what did we really achieve from that initial audit that we did? So this brings us to this element of what is continuous assurance and is it for me? So what is it, firstly? So it's a move away from periodic evaluation of risk and controls and towards something which is real time or near time. And so real time means that it's actually happening exactly at the same time as the control has been operated. Near time means it's a period that is close to that. It could be maybe the end of the day, so it's not real time in terms of the 2 o'clock transaction, but it is happening at the end of the day to enable you to pick up a control failure. And it would basically be a time that is appropriate for the control that you are testing. Some will have to be much nearer real time than others, essentially. Some you may only test monthly or even quarterly. Others you would want to be doing daily or even hourly to make sure that they're working. Because it's using data, it's connected to the systems, it's based on 100% of transactions. So our opinion will enable us to tell management exactly what is happening, to which quantum, what value is at risk or has been lost, all that sort of information that management would really like to know. And because we're using technology, it is very efficient as a delivery mechanism. Going back to the earlier point, you design the test once, you build it once, and the tool then is able to replicate that as often and as frequently as you would like to. Look at the earlier scenario that we had. So we had our individual audits. What if, not just giving the assurance at that time, we were able to then extend the assurance to replicate it on a regular basis? All of a sudden, we're giving management assurance over 27 controls, perhaps on a weekly or a monthly basis. That's over 12 months. If we were to then extend that perhaps to a secondary period, all of a sudden we end up with a situation that actually we're providing, again, ongoing control over maybe 54 controls and so on. So I hope you can see it can very quickly be leveraged to provide assurance over a significant number of controls. And the important thing being here, we're not talking about any additional headcount. This is with your existing team that you're using. So it becomes very cost efficient from an assurance perspective. So if we take our model that we had earlier, where we looked at the audits coming in and the reviews and the quality going up and then falling again, what we're talking about is actually these little green arrows are the continuous assurance. So consistently, that control is being tested and management have been highlighted that quality is falling, or if there are any perhaps training needs identified that a certain person is not performing a control adequately. Because again, if we're looking at 100% of the transactions, we're able to give that level of detail. We're able to say, actually, yeah, most of your team are absolutely fine, but there's these 3 people who are not following the process correctly. That's really useful information from a manager. To a manager, to enable them to highlight what exactly do they need to do to fix the problem in the most efficient manner. We've probably all been there where we've finished a review, we've taken our sample of 35, we've found a few apparently random errors, and we make that wonderfully impactful recommendation that says remind everyone of the process or retrain the department on the process. But we're not able to be specific because we've only seen 3 or 4 errors. They're seemingly unconnected. We have to make a recommendation, so we do it with the best will in the world. But if we're being honest, it's a pretty unhelpful recommendation. If, however, we were able to be a lot more specific and say, actually, these are the people who are making the errors, or maybe we can say, we can see that the frequency of errors is increasing or decreasing. Actually, we can say to them, look, okay, you're outside your risk appetite at this moment in time, but we can see that your number of errors is decreasing. In a month's time, you're going to be back within risk appetite. Well done. Or maybe actually you're currently in risk appetite, but we can see it's getting worse. So they can take action before they breach those risk appetite thresholds. If they've got information, they can act on it, is the bottom line. So what are the benefits then? Well, from a process perspective, it's ongoing automated assurance, let's say real or near time controls testing. The other interesting thing that it does, it protects against staff turnover. How many of you have, perhaps particularly those of you in smaller teams, someone decides to leave or is off on long-term sick, and all of a sudden your delivery of assurance to the organization plummets because people are not around to do the work. Actually, with continuous assurance in place, those existing controls that you've already set up will continue to turn whether there is somebody there or not. They will still be delivered. So it does provide you with that safety net in terms of the level or the scope of the coverage that you're giving, even if you do suffer from staff turnover. Again, just to reflect, it does allow us to fully quantify the risk or the error rate and allows for future trend prediction. It can be, it's less resource intensive to do. It can replace a follow-up audit. If we've got those continuous assurance reviews and automated checks going on, why do we need the follow-up? Because we know the answer already. An increased external reliance. We'll come back to this, but this is a real big one. If the external auditors can see that we are testing controls rigorously and consistently, and that issuing the results, that could lead to increased reliance from the external auditors on our work, and potentially reduced external audit fees. So there's another option there. And finally, again, we can alert management if things are going wrong, or indeed we can use the information from those 54 controls that we're testing every month to feed into our annual planning. So actually we know immediately, we've got the test going on, we still know that this process is causing a problem. Actually, let's go and revisit that, because we can, maybe we can provide some additional insight. Maybe we can understand better why things are going wrong. So all of these are benefits of continuous assurance. So who can make use of it? Well, actually the whole organization. So management, first line. So they can receive the output of continuous assurance, so they can understand what's happening in their business areas. Second line, again, your risk management functions, compliance can equally use that same information or be running their own independent, with a small I should say, small, independent reviews to understand what's going on and feedback to first line. Internal audit, obviously, third line with its big I for independence, and finally the board. And you may find these termed slightly differently. Continuous monitoring is typically what we would call first and second line doing this activity. Internal audit is the continuous auditing, and then where the board get the comfort, we're talking about continuous assurance. So it's all actually the same thing with some slight tweaks on the detail, but essentially it's all the same thing. We just call it a different thing based on who's responsible, and who's getting the benefit. So let's look at a couple of really basic use cases that you might find quite interesting. So let's look at accounts payable. Excuse my terrible slide here, but hopefully you'll get the message across. So we've got a general ledger, invoices being paid. Now the general ledger will probably do some rudimentary duplicate test controls. The typical one that these systems don't deal with very well is where you have the same supplier set up more than once. That's normally the first thing they check. Or is it the same supplier? If you've got the same supplier in twice, or maybe an invoice has been keyed to the wrong supplier, as an example, general ledgers typically won't identify that as a duplicate. So the general ledger, we process the invoices, they go through to a pay approval, they get approved, we send the payment file to the bank, the payment gets made. But what if we have paid a duplicate? We then end up with, firstly, how long does it take to identify that we've made a duplicate payment? We've then got to go through the process of communicating with whoever's received the money, asking for the money back. Maybe they'll return it straight away. Maybe we then have to go into a full-blown process to, credit control, chasing them, asking for money, maybe even court action to get there. So it becomes very inefficient to recover that money. So a better way perhaps would be that actually putting in the middle of that some continuous monitoring with perhaps some more advanced duplicate test detection, what we would call perhaps fuzzy matching. So we're saying actually where the vendor could be the same or different, that could be fuzzy matching. The invoice number perhaps is the same or very close. Maybe it's the same invoice number with a full stop at the end. So we can do that fuzzy matching, that advanced checking. Maybe the date is similar but not exact. Maybe the amount is similar, not exact. Maybe a combination of some or all of those. That's the point we're looking at. So far more sophisticated than your typical general ledger accounts payable system would do. But if we were to have that running, maybe on a daily basis, we could then send an email alert to the approver to say, by the way, you've just approved a duplicate invoice, or here's a list of invoices that look like they could be duplicates. Please go and investigate. And depending on the timing of all of that, that would give you the opportunity to potentially remove that payment from the payment file to the bank. So we don't actually make the payment in the first place. And therefore, we save that whole process of trying to recover the money and get it back back into the organization. So that's one example we could use. Another one which, if any of you are in IT or have anything to do with IT audits, you'll probably love this one. And this is my free takeaway for you to take back to your organizations today. IT profiles. Have people got the right profiles? I would probably put a small wager to all of you that any external review, external audit would come in every year. They find some of these where people have moved within the organization and they have the wrong profile attached or an additional profile, additional access that they shouldn't have for their new job role. Starters and leavers, strange enough, seems to be normally quite well controlled because I guess HR are perhaps more heavily involved and therefore they tell IT that someone's left or someone's joining and that gets sorted. But the internal movers is always a problem. So we have our IT access profile that says, here's this profile for Alain. That means that Alain is working in audit today, so that's the profile he should have. But what if that's incorrect? What if no one's told IT that Alain actually moved to finance last week? So he's got an audit profile, but he works in finance. Well, the way we can deal with continuous auditing or indeed sort of data analytics is maybe we could take that IT access profile and combine it with the HR records. Where do HR think that Alain works? Do they think he works in finance or do they think he works in audit? And maybe then even combine it with finance. So typically all employees are tied to a organizational cost center for budgeting purposes. So what we're looking at, any discrepancy between where HR, finance, or indeed the IT access profile think that Alain works, points to some data being incorrect. Now, it may not actually be the IT access profile. It may be the finance are wrong or HR are wrong, but either way, there's something to investigate there. And the point here is that this is something that actually your IT team could do themselves. This doesn't necessarily need you as assurance functions to be doing this for them. This is something they could do themselves, do the checks, get the results back, and then they can query. Assuming you leave that to the IT to manage. That's obviously an internal discussion. But the point being is this is something could be done very, very quickly, very simply, and remove that whole issue that you probably get every time you have an external audit coming in telling you that the profiles are wrong because somebody forgot to tell IT in the first place that someone had moved. So an interesting one to take away for you. So let's look at some of the barriers that we've touched on already and see how we go. So just to remind you, these are the ones that we came up with earlier. So we're going to work through these individually. So the first thing we're going to say is a tool. We don't have a tool. Let's talk quickly about tools and really just a couple of minutes just to talk about not all data analytics tools are suitable. So to do continuous assurance, we need a tool that is not too complicated. So, I mean, there's lots of tools out there. Some are easier to use than others. Some are very specialist. If you're looking at Python or R, something like that, incredibly powerful. But for most of you in assurance teams, I would suggest they're too complicated. You're talking sort of old-fashioned coding into a screen and writing scripts. And fine, if you have someone in the team who can do that, brilliant, make use of them. But for most teams, it's too complicated. You have the other side of the spectrum, which is the number of records can be processed. So something like Excel, very popular choice, but actually you have a number of limitations, one of which is the number of records that could be processed. And not only just the records, but just what you can do with certain size of files. So we have people who, have used Power BI as an example, another free tool from Microsoft. They tell me that anything more than 40,000 records, their Power BI starts falling over and running very slowly. If you've ever tried to use conditional formatting in Excel with, a good number of records in there, nowhere near to, in the tens of thousands, again, that can start running exceedingly slowly. So you need to look at, the complexity and the number of records that you're looking at. What functionality is available to help you clean and transform that data? How are you able to split that full name of each employee into a surname followed by an initial, taking into account double-barreled and hyphens and so forth. Have you got the functionality within your team to do, or within your tool to do that? No or limited repeatability or automation is probably a big one. Again, sort of your Power BIs, your Excels, they're good at what they do, but it's not really data analytics. And in terms of repeatability, you are relatively limited in terms of what you can do there. Obviously, if the caveat on all of this is if you have experts in Power BI or Excel in your teams, you can go an awful lot further. But I'm talking most users here in terms of this. The ability to connect to a variety of data sources, PDFs, maybe you're getting files in PDF, that creates challenges in terms of getting the data from there for many tools, or indeed you just need something that needs to connect to a SQL database somewhere, or something perhaps a bit more exotic, and pull the data back. Again, your normal Microsoft tools you're going to struggle with in terms of doing that. And again, do you know what's gone wrong? You need something that's going to tell you what's happened, when it's failed, rather than just imagining that everything's working hunky-dory. The way I suppose I would summarize this is think of driving a Formula One race in your family car. It looks, with Excel and everything else, it's got four wheels, it's got an engine, it's got a steering wheel. It looks broadly the same as a Formula One racing car, so it can't be that different, can it? Well, you probably will finish the race, but you won't get there particularly fast or in a particularly stylish way, should we say, or efficient way. And the same is true with data analytics. There are lots of tools that will do some or all of what I'm talking about today, but sometimes it can actually be more difficult to try and use a tool that's not built for the job, and that's we can talk about that later if you have any questions. So what would we use? Well, we use Arbutus Analyzer. So those of you who are familiar with myself and Alain probably already know that. And essentially, if you've heard of ACL or IDEA, Arbutus is basically an equivalent to those. It's been around 25 years, used in over 60 countries. For us in the UK, it's only been here about 3 years, so that's why no one's ever heard of it. But certainly, if you've been to IA conferences, you've probably seen us and our stand, and we're very happy to talk about the tool. Why do we choose Arbutus Analyzer? It's designed for business users and not data scientists. The way you write formulas in it, if you need to, is the same as Excel. So Excel users can take to it very easily and can convert. It's not got its own special language. It can deal with any volume of data source, and a wide range of them as well. Lots of very powerful functions to transform data. You've got full automation scheduling available. So the little screen I showed you with the, what day of the week would you like, etc. That's from Arbutus, unsurprisingly. So very easy to interact with and get it to do what you want. And it keeps a full trail of what you've done, whether you've done something for the first time, you then want to automate it, or whether you just want confirmation that, your automation has worked, that the output has been, provided as you expected it to. And to get that comfort that it didn't fall over overnight for because the database was unavailable or whatever happened, you get that comfort. For me in the UK, just as an aside, when we started looking at this, I've dealt with the other tools, and I selected Arbutus because of the fact that I believe it's just the best fit for an audit team to use. That's why I chose Arbutus rather than the other tools to resell. The other piece, which is quite interesting here with Arbutus, is it can integrate with the business processes. What do we mean by that? Is, well, continuous assurance is fine, and from an assurance, an internal audit perspective, third line, that's great. But actually, maybe we want the first and second line to use it as well. So with Arbutus, what you also have is something called Results Manager, and that means you can build process workflows so that the results go to the team that originally processed the item. They can then create their own workflow so to resolve it, and fix it, rather than just having a report that says you've got 50 transactions need reporting. You can track the resolution of those, make sure they actually get dealt with, and that's where it kind of integrates very nicely with actual business processes. Okay, costs. Can't get away from costs. Probably the one thing we hear all the time. So let's face straight into it. So what I would say is, as assurance teams, we are kind of programmed, I guess, to a degree to only look at expenditure costs. So how much are we writing a check for something? What we don't tend to look at is the actual costs of the personnel doing it. The example I would use is just look at the time you spend doing follow-up audits or doing tracking outstanding audit actions. I've pulled this slide. Appreciate not everyone's going to be in the audit space, but hopefully you can perhaps do your own calculation. This is from Glassdoor in the UK. It's a bit like a trip advisor for companies and jobs. Glassdoor tells me that the average auditor role in the UK is for 46,000 a year. So what does that equate to? Well, that's a daily cost of 171 plus on costs. So roughly £225 a day per team member. So if you're in internal audit, happy for you to accept this, or maybe you've got some other numbers in your mind. Just fix in your mind, what does that equate to for you in your teams, in your environment per day for somebody's time within the team? So it's quite important. We're going to come back to that in a little bit. So yeah, we as assurance teams, we just accept that certain things are done. So yeah, follow-up reviews. We go and do a follow-up review. It's another audit or several audits on the plan. How long does that take? At £225 a day. What you suddenly start to see is actually it doesn't take too many days, therefore, till you're actually saying you're into the thousands. When we come back to the pricing a little bit later, that will be very relevant. But hopefully you can see where we're going with it. Again, our little model we showed you earlier with these 27 controls, a different way of looking at that is if we were delivering 27 controls, let's say monthly, the board, the audit committee, whoever you report to, they're getting a report every month on 27 controls. How many staff would you have to employ to deliver that level of assurance to the board? I would suggest probably quite a few. How much would they pay, the board be willing to pay for that level of assurance? That's the other thing. What if it's an unmitigated risk? Now, I fully appreciate that's a bit of a piece of string, isn't it? Some risks will be very low cost, but there's probably some in that 27 that are key controls that you could probably put a fairly hefty financial tag on or significant financial tag on if it goes wrong. So actually, we're talking about investment and return here. What would some of the stakeholders pay to have comfort over that key control, to know that it was working effectively on a regular basis? And do they actually value the concept of ongoing consistent monitoring? I would say, that they probably would pay a price to have that comfort over those key risks, and I would say they probably would value it. But obviously, your organisations better than I do. So again, this is all looking at cost in a slightly different way for us as assurance. Administration time to produce recommendation reports. So again, this is another thing we just assume as part of what we do as assurance teams. One of our clients, they used to spend 7 hours a month pulling together their reports to send to the various management committees. They decided, actually, having bought Arbutus, to use Arbutus to do the interrogation itself. They bought it to do to do data analytics and continuous auditing, but they thought, well, why not? We've got the tool. So they now do it in, I think it's 5 or 6 minutes a month, because they basically press the button, Arbutus goes and does it, pulls the reports together, does the emails out to the managers concerned. So, to that £225, 225 times 12, what's that saving them as a team? What else can they go and focus on rather than sending bits of paper around the organization? Increased external audit reliance. I've kind of touched on this already, but yes, if we can basically produce, show the external auditors that you're doing regular reviews of the key controls. You might even say to external audit, give me the controls you would like us to test for you. So actually, instead of coming in the half year and the end of the year, the external auditor is getting regular reports on the controls they've asked to be looked at. Again, does that translate to reduced audit costs? So the question is, when we talk about continuous assurance, who's benefiting? Is it the assurance team, i.e. it's our cost, or is it the wider organization? In which case, if they're benefiting, does the cost not fall a little bit into their camp as well? Is it indeed a cost or an investment? Actually, we're making efficiency savings here. So, in normal budgeting territory, and I always have the argument or the discussion I've heard, which is, oh, you're not a cost center, you're not a profit center, you're a cost center as assurance. So we don't make money, we just cost money. Actually, this is a way of turning that around to a degree. Actually, we're making ourselves more efficient. We can help management themselves to do things easier. And what if you're solving a business challenge or a pain point? We probably all have something in our organizations where we think we know things are going wrong or people are concerned. Could we solve that and make it easier? The big one in the UK is NHS. We have this rostering system for people working in the hospitals. We have the HR system. The two systems don't talk to each other. But actually using something like Arbutus, we can join that data, compare the data sets together to check that people are not working when they're off, as a what's called a bank or a casual worker while they're off sick, as an example. That's money to save for the organization and something that they struggle with at the moment.
Neil, I'm not sure
Yes.
whether you're aware of the time. Just want to draw your attention a bit to it.
Thank you, Alain. Yeah, move through. Okay, thank you. Okay, very quickly then, another one just to look at. So cement manufacturer, the audit team had basically spent 60 hours a month to reconcile some reports, to basically rubber stamp the reconciliation so that they were okay, they were accurate. 60 hours a month, incredible, but that's what they told us. We used Arbutus, took us an hour to design and build it. It now takes 2.5 seconds. So it comes back to, yeah, if you had something similar to that, how much would the organization attribute to that? Okay, don't know if anyone can do it. I guess this is the skills piece. So there is training available. We deliver for the IIA in the UK. So we do data analytics for auditors is our training course. Essentially, there are training courses out there. Obviously, other training providers exist and may well have something relevant for you. But do bear in mind, we also have co-sourcing that we can come in and help you if you have a specific challenge you're looking at that you don't have the skills or the tools, or our tactical wins approach, which we'll be discussing shortly, could be useful as well. Where do we get the data? We could cover quite a lot of time on this, so we're just going to cover some just principles here. So the first thing to think about is, do you know what data sources you have in the organization? If you don't, that's probably something to start looking at. What are the key systems? What data do they hold? Do you know who actually understands those systems? Then we can ask the question, how do we get access to them? Who can we make a request to get data from those systems? Once we know that, we can then start exploring how is the data stored in those systems? What are the data tables and data fields? We can start building that over time. And then ultimately, how big are the data sets? Which, will our current tools work with those? How often is the data refreshed? And a good place to start with all of these is start with your standard reports. You're going to do an audit of process A on system B. What standard reports are available? What data can I get from that? Once you understand those a little bit more, you can then move to discrete data extracts. I'm doing an audit of payroll. Please provide me with this information in a report as a precursor to direct connection, and this is the traditional way we would teach people to access data. So there are ways of getting data, things like the training. Obviously, we go into that in a bit more detail. Getting started then. Two main approaches we look at with continuous auditing. One is the incremental recycle approach that we talk about, and then we have this thing called a tactical wins approach. So we'll move on to that now. They're not mutually exclusive, they can overlap. In terms of the incremental, this is the traditional way, I guess, most people move to continuous assurance, continuous auditing. So it's a case of taking the analytics you use as part of your actual review, and then basically at the end, you then convert those data analytics and put them into your continuous assurance tool. So you're taking maybe 2 or 3 hours at the end of each review to say, what data analytics tests did I do as to get to that conclusion? Then we kind of industrialize those tests, put them into a schedule for the continuous assurance. So it basically means your library of tests gradually expands, week on week, month on month, review by review. You build the library of tests that you're looking at. And the one thing this does give you then, it means you've actually got all the information for your, your follow-up actions and your ongoing monitoring. You don't need to go and ask for evidence from the manager, have they fixed it, because you can see through the continuous assurance whether or not the problem has gone away. And perhaps you don't need to do a follow-up for the same reason. You can see exactly what's happening and how things are getting better or not. And again, this can be deployed in parallel with a tactical wins approach. So let's look at that in a bit more detail. So what do we mean by this? Well, what we mean is that for the incremental approach, first and second line, or first line, are doing their process controls. So they're actually, they're doing what they normally do, their quality assurance and so forth. Your second and third line are maybe doing different types of sort of reviews periodically and tests to see what's happening. And they will then provide some recommendations and findings to management to go in action. But what, instead of giving them recommendations, we gave them the recommendation and the test parameters that we used to get to those findings, to those recommendations. What that then means is that an automated solution could be introduced that's accessible by both first, second, and third line assurance functions. Management get their automated control assessments. Second and third line get the output of those to understand what's happening, with the results delivered by email, exception reports, workflow, or dashboards, as we've talked about, or we will talk about, should I say. So that's kind of how it could work with the incremental approach. And what you have on the right here then with the first line is what we call continuous monitoring, and the left we have is the continuous assurance. The key point here, which comes across all the time, is with this model, what that means is that first line are responsible for running their own controls. I hear a lot of people getting sort of, well, we can't introduce continuous auditing because then we are the control for management. Very clear on this is no, we hand it over to management. They are responsible for running it. It is their control. We may well run the same to give ourselves comfort, or we may receive the output of theirs for the same purpose. But ultimately, first line and second line are responsible for their own running their own assurance, rather than us as perhaps third line running it. Tactical wins approach basically gives you a high impact, fast delivery option. So what we've talked about with the incremental will build over time, and we'll look at a diagram which we'll talk about that in a moment. But the tactical wins is a fast delivery method of looking at that. So what we're saying is that myself or Alain, we would come in, we would look at business objectives, risk logs, assurance plans, and so forth, any pain points, discuss around data sources, and basically collectively or collaboratively we would identify 5 to 10 tests that could be developed. We would then build those, test those, schedule those, and then deploy them, and then fine tune them as necessary to make them live. So what you end up with is, within sort of a 30-60 day period, you have some continuous assurance up and running in the organization, typically around the key controls. You wouldn't want to do this for low level controls, but those key pain points, those key controls that management really want to be comfortable, are working. Let's look at these two approaches. So I'm conscious of time here. So we have our timeline on the bottom there. It doesn't need to be precise, but it's indicative. Our incremental approaches, we have our plan, we have our individual reviews are being undertaken, and initially those are just being used as you perhaps are using them today. The answer being is you use the data analytics for the review. You don't really do very much with that information afterwards. Then at a point in time, perhaps the team move to continuous assurance aspect, and they do the review, and then the tests start feeding into a continuous assurance tool. And typically we see this is sort of, I suppose, anywhere between 18 months and 3 years is typically what people would look at. So they're getting used to data analytics in the first part, and then they go with the continuous assurance. With the tactical wins approach, we take a different view. So we come in and we do the workshops, agree the pain points, the data, and build and test that, and then basically deploy it. At the same time, because we have the technology there, each review then starts building through at the same time. So what you end up with is that a much shorter time frame in terms of moving to that continuous assurance position. And again, just to kind of recap on this one, what this means is that we very quickly start moving to that sort of 54 control piece, because each time the number of controls being tested is growing all the time. But with the tactical wins test, they're available from day one and will be running throughout that. So let's move on to costs. A couple of things. So we've got both sides here, just very quickly to explain what we've got here. So the left-hand side is the incremental. So there's two or three elements to the cost. The main point here is that with the incremental approach, the continuous assurance doesn't come in this instance until between years 2 and 3. So the first 12 months, you're not getting continuous assurance, you're getting data analytics. Roughly speaking, over 2 years, what we're looking at is sort of £12,000 or euros, I say, with the continuous assurance put into year 2. With the tactical wins approach, you get the continuous auditing or continuous assurance, very early on, say typically 30, 60 days, and you're looking at sort of 20,000 over a 2-year period. But I say the key point is you get that continuous assurance. Very straightforward. Now, you may look at that and go, well, Neil, that's a lot of money. Go back to that cost I said in terms of the auditors, £225 a day. You can see that actually that then starts becoming a bit more interesting. I'm not going to say it's cheap, but it comes a bit more interesting. So we look at our 27 controls and those questions we challenged in terms of what that looks like. What we're looking there is potentially 36 days. I mean, if you have an auditor who leaves, you could have a 36-day gap, before you recruit someone. So 36 days at £225 a day, that starts, becoming then achievable. So it's just really a way of looking at costs slightly differently to make that, make that assessment as to where you can use continuous auditing and making it work for you. Last example, really, just to look at, so this is one of Alain's actually. So he had a client, a one-person assurance team for a European motor import and distributor. They were interested in duplicate payments, but they were also very interested in discounts. Very complex environment with the motor retailing, manufacturing. You get so much of a discount for the air conditioning, but then if you sell more than 3, you get an override or a bonus, but you can't sell that with this other discount. It's very complicated, but ultimately it's all rules based. So Alain's client put this in, so you can see there sort of 16,000 or 11,000 investment, annual cost 5,000. They've saved just over 4 million in a 3-year period because of that. So yes, this is an extreme example, but each organization is different. And it's not to say there's something not similar within your own organization. And on that, I'm going to hand over to Alain to kind of take you through some more real world stuff.
Okay, thank you, Neil. So we've gotten a very thorough introduction on theory, and I would like now to take that into practice. I'm not, let's say, trying to convey the message of this particular analysis. I'm trying to convey the idea and the approach in practice. So here we have our objectives for this tests, 3 tests basically. It's a data set for accounts payable. We have invoices in headers and details, and we have some vendors. And our first test is that we want to recalculate the line total. Second is a duplicate invoice check. We will be looking for duplicate invoices, either exact duplicates, so the same vendor, the same date, the same amount, and the same invoice reference. And we will also introduce a fuzzy duplicate check where we have, again, the same vendor, same date, and same amount on the invoice, but the reference is slightly different. Very similar to the other one, but slightly different anyway. And the third set of tests are two-way matching. So it's a two-way matching of the line items and the headers and we'll see whether any of the two are missing in the other tables. And if they aren't, so they're matched up, that's great. We still have to, let's say, compare the totals. So again, it's not so much the content of this use case, it's the approach we take to build it. So I will switch now to Arbutus. This is it. Can everyone see this tool? Or rather, if you can't, please put something in the chat. Yeah. So Arbutus is a Windows application. Obviously, this is the desktop in Arbutus. We have, of course, the menu at the top, and we have a toolbar. So indeed, we have a toolbar, and here we have the input tables or starting tables that I talked about. So we have a vendor table, we have the invoice headers, and just to illustrate a few points, this invoice headers, for example, we have the invoice amount, we have the date, the reference, the vendor number, and record number. And we could simply, just to give you an idea, total up all the amounts to see what we are talking about. And it's quite a lot of money if you look at it that way. If I look at the line items, so really the detail lines on the invoice, just as a matter of interest, if I count those lines, I'm getting to 1.2, nearly 1.3 million records, just for your information. And anything you do, as Neil has mentioned, is being logged. So I've opened the table, I've totaled up the fields, I've opened up another table and did a count. So all of that is logged in terms of the command plus the result of that command. So this is really very basic. Now, coming back to those tests that we wanted to run, I created beforehand a workflow, and it looks like this. Now, what is a workflow? A workflow is a means of performing an analytics without starting to code, simply by dragging and dropping all the available commands here on the left. For example, this one is a table, so we're bringing in a table by dragging that and putting it here. And then we extract it and then we export it to Excel. Looking at this very simple test, what will it do? It will bring in the invoice line items. And if I look at the command exactly, it will extract all these fields, plus two additional fields here that we want to use as calculations. Only, and this is a crucial part, only if the line total in that table is different from the item price times the quantity. So those are the anomalies. And then this last part is basically exporting those fields into an Excel file. It'll be called report. And in that report.xlsx file, it will add a sheet or a tab, as you want to call it, A1 for test A1 recalc, just a short name. Now, if I run this workflow by clicking the big button here, run the workflow, you will see the number of records plotted below those tables that have been created there. It's already done. So here we see that we have 27 records for which that total wasn't quite correct. Now, I did mention it's been exported to Excel, so here we are. If I open the Excel file, and I do hope that shows up for everyone, in that recalc sheet, these are, let's go down, the 27 records that are, let's say, an anomaly. And additionally, we already calculated the correct total, or rather the total if you count or multiply item price by quantity. And we've added the variance, so the difference between this total and the one that was listed in the table. Okay, so no, this is not a complex test. That's not my point. My point is simply illustrating what a workflow is. The second test, duplicate invoices, let's look at that for a second. We are comparing the invoice amount, the vendor date, so the date the vendor put on the invoice reference by the vendor, and the vendor number. And if all of those fields are exactly the same, then we will consider that a exact duplicates and then export that to Again here, the same file, report.xlsx, and call it, oh sorry, it's here, the exact duplicates, edit command. So edit in the exact duplicates B1 sheet, yeah. And it's already generated. So if I look at this in the Excel file, these are the exact duplicates. And you can see here, these two lines in the Excel file show you the exact duplicates. And again, we have a repetition of the same data and again and again. So this is the exact duplicates. The second duplicates test is nearly the same, except for one difference. We say, look, we're not looking for the same vendor reference. We're looking for a similar one. Okay, so a slight change. And that is also exported to Excel. I can open that here. It's already generated. The layout of that table is slightly different. So you can see here, the left to right vendor number, vendor date. So these three here are exactly the same as those three. So I'll simply hide those in Excel. And then I will see that here there is, for example, in this fuzzy duplicate, there's a dot added to the end, or the one, the digit one has been written here as a L or a capital I, depending. Here we have one, let's see, here we have one with 1104,865. The 0 has become the letter O. So these are typical data entry errors that we can catch with that fuzzy duplicates check. I won't go into much detail here. And then finally, the two-way matching, what we're doing here, again, this is just by dragging and dropping these elements. We're looking at the invoice headers. We want to compare the invoice headers to the line items, but before we can do that, we need to summarize the line items into a new table by the invoice number, of course. And while doing so, we'll add all the line totals up, and then we have the join here to bring those two together. So we're joining on the invoice number on both tables. And then we are looking at the anomalies. Either we have a filter here that results in the missing line items, meaning a header without details, or headers without line items, or correctly, let's say, data in both tables, but the results, or rather the totals, are off. So all of those are added here in the Excel file. Yeah. And this is by dragging and dropping elements here in that workflow. Now, this is a local workflow. This is running on my laptop. If I start Analyzer again, a new system or a new client here, and go to the Orion, that's my server. So now on the hub, to enable that continuous monitoring, what I can then do is having that same workflow here, same workflow, just coming up, yeah. And rather than run it, I can say I'll schedule it. So I'll just close it. And this is what Neil mentioned before. I can schedule it to run, I don't know, every month, a certain day of the month, or every week, let's say on a Tuesday, like today at 11 o'clock, the time the webinar started approximately. Yeah. And I'll share it. It will then be scheduled for next Tuesday and the next and the next and the next. And that's basically it in terms of the workflows. So that will then run. And if it runs, it will get a log. And as you can see here, I've run it quite a few times in the last couple of days just to test, of course. And if it's a green kind of traffic light indicator, then that procedure or that workflow ran just fine. And that's it. Now, we can go one step beyond that, and we can create a proper what we call procedure. And then we do come into the coding area. So it takes a bit more, let's say, practice or experience. And then we can add something more on top of that. We can create an email out of that, an email that then contains the information. It will look something like this. I'll just drag it over. Yeah. And this is an email that basically says, look, this was the input, the tables and the amounts, and these are the tests we ran, the number of exceptions and the amounts, and attach that report file. And then it really becomes, let's say, continuous or very frequent test. Once we finish this session in about 10 minutes time, I will restart this procedure and it will email all of you. So all of you who have registered beforehand, so I didn't take into account people that joined during the session. So all of you have registered beforehand will get an email exactly like this as an illustration, basically. Okay. Hope you don't mind, and it will take a bit of time because if I do it too quickly, I get bounced by the email server. So it will be over the, let's say, next 90 minutes. You'll get an email like this normally. Okay.
Brilliant. So hopefully, guys, that's given you a bit of a flavour of what a tool could look like. I mean, obviously, there's be very Alain and myself be very happy to talk specifics with any of you in terms of sort of precisely what can or can't be done within the tool, but hopefully gives you a bit of a flavour. And I guess the key point being is with those workflows, it doesn't necessarily need to be particularly complex to do it. So let's just do a final sort of slide, really, just to kind of wrap this up. Then, really, is in terms of what does this mean in practice? Well, I think the key thing is that the key benefit from continuous assurance is that the fact that the assurance is deeper and on a more timely basis. I would suggest to you that not engaging with data analytics or continuous assurance, is not really viable over the medium to long term. The IAA standards have been updated to reflect more strongly the requirement for data analytics, and continuous auditing is really part of that journey or continuous assurance. Oh, my apologies, the slide's gone out of time. And I think really for smaller teams, I get a lot with the cost. People say, "Oh, small team can't afford it," but actually, I would suggest that the impact of doing continuous assurance for a smaller team is kind of exponential versus a larger team. Because if you think there's only 3 or 4 of you in the team, maybe even less, if you can do what Alain's colleague, a client was able to do, and do all of that as a one-person team, imagine the assurance and what that's going to do for your standing within the organization. It does, however, require resources either in time, costs, or both. But the key point here, though, is sorry, my slides have gone out, is that we can help. There are options to bridge those skills and resource gaps, and as we talked through on the tactical wins, we can indeed shortcut the deployment of continuous assurance as well, by looking through that overall cost benefit for the organization as a whole, taking it outside just assurance and taking it outside of just are you writing a check or is it an internal cost, which I think is something we as auditors and assurance teams, we get sort of pushed into that a little bit by the finance teams. So we'd just like to open up the questions and answers. I know we've had a few over the session. I think Alain's sort of responded to some of them, but very happy to take any questions from the floor, or Alain, if you've got any that we haven't covered as yet.
Top of mind, I think, or top of mind, what I remember one was, can we extract SAP data? Then I think the answer is certainly yes. We have a plugin or a module, let's call it, that can access SAP. And as soon as we get to the data, we can then export it, run tests on it, combine it with other data sources, most notably. So I think in short, the question or the answer there is yes. Just at the end, I see how compatible is Arbutus to most ERN systems. There are about how many other 27, about 30 data connectors now to various systems. My advice to, in this case, it's Graham, but maybe others have the same question, is if you have a very particular system, please reach out to us, mention the system, and we'll get into a dialogue. We'll find out exactly how we can get to the data. It's not, let's say, one solution fits all. Maybe that there's different ways, different systems. So please reach out and we'll get a detailed answer to that question. But there's many options. I know that. There was an interesting one about what, I'm not sure it was somewhere in the what if The same test has already been done, let's say, in the first or the second line. What then? Maybe one for you, Neil?
Yeah, absolutely. So well, I think there's two or three angles to this. The first one would be is, well, actually, if it's something that could be put into a continuous assurance tool, then is there any, that there is a piece that says both, however many review teams want to run it, could run it all through the same method, independently, because ultimately you're only talking about computer resources. So you could run it separately, or indeed run it once and you all get the output. So you can all then deal with the output in your own particular way. I think what I would say is, in terms of, this is one of the things I see, is that the continuous assurance or auditing changes the way you can do audits, because actually what you end up doing is, rather than just going and reperforming your same audit again, the way you might have done it before, is actually the audits and the reviews take on a different approach, because actually there's a technical side that says, if the first line are running a piece of continuous monitoring, there's a technical review that says, is that piece of continuous assurance, continuous monitoring, fit for purpose? Have they included all the data sets? Have they, is it robust? But then the auditing, the review part almost turns into a much more adult conversation with management, which says, well, show me what you're doing with the results of that analytics. And they should be able to demonstrate to you how they're getting the reports and they're actioning any exceptions. So it does change going forward how the audits, the assurance reviews could look. But I think it depends on the question, the focus. But if I read correctly, and you basically got several people doing the same thing, you could all put it into one piece of, continuous assurance, and then you all get comfort that it's all been done in the right way, that it is actually been done, and so forth. So happy for whoever raised that question if I've missed the point to clarify, and would happily respond to that. Yeah, no, that's great. And just to add to that, but by all means, and it's kind of implicit in what Alain was saying, is do feel free to send any further questions in. If you're anything like me, you'll think of it in about an hour's time. Do feel free to email Alain and myself, and again, we will be very happy to respond on those.
Okay, then maybe this last slide to close the session, if that's okay.
Yeah, absolutely.
Is there are more webinars planned, actually 2 in November. Typically in November, ACFE celebrates their audit awareness week or fraud awareness week. So I'll be dedicating 2 webinars then on fraud indicators, how you can develop your own, starting with very basic ones on November 7th, and then more advanced fraud indicators on November 9th. This is more practical, so there will be more, let's say, of the tooling there in the webinar, but you're more than welcome. You can find the link of those events there on the page. And it's a Teams session like today. So before Neil closes the session, I would like to thank you all for your participation today. Over to you, Neil.
Yeah, no, thank you very much. It's been a pleasure having you all here. I say, please, I think just literally finally finish up. You're all going to be on different stages on your journey, and there is no such thing as a silly question in this space, because there is so much has been talked about, but actually in relative terms, so few people have done anything. So please do reach out to Alain or myself if you have any questions. We would be very happy to kind of respond to those and have a conversation or email, whatever's easiest, just to kind of help you on your journey as you get started.